All right, hi everybody. How are we doing? Good morning. Or good afternoon, depending on where you guys are from. So a couple of things. As you guys know, I'm at kind of doing my own thing now. I'm not with FX Bootcamp anymore, so I don't do. This is the only webinar I have. So if I sound good, thanks, Kevin. So if I sound a little bit rusty, it's because I just don't get to talk a million times a day like I used to. But I hope everybody's well. And I'm going to talk. Going to have a discussion today on some common sense stuff. I think sometimes it's helpful to point it out, and more about sort of general scenarios using multiple time frames, a little bit of correlation, that type of thing. The actual my actual speaking portion's fairly small today, so it's going to be more of an open discussion, Q&A, I think, is what it's going to evolve into. But I just want to talk about a couple of things and try to bring a little more understanding to the market, which is very tight right now. Obviously, FOMC in a couple of hours, hopefully that brings us some better price action. So, like always, always appreciate your input, and more questions the merrier. All right. So, just getting back on topic here. So today's webinar is on fractal geometry, which is a pretty exotic word for multiple time frames, right? And I think that we need to just go over a couple of basics very quickly, and I'm not going to harp on them because I've done this extensively in other webinars, and if you want to, thanks, Mehad, if you want to go back and look at the recordings are there under my name on the FX Street website, so I'd encourage you to do that. All right, now, if we, and just stick with me here, guys. I'm going to go quickly, try to get a fresh piece of paper here. I'm going to go quickly just to, in the interest of being expedient, so we can get on to other things. There we go. All right. So, in the market, we have, obviously, I think to trade, and obviously this is just my little opinion, to trade Forex well these days, when I started currency trading, it was, what is the dollar doing for the day? What is the yen doing for the day? And those were basically your two questions. All right. Now it's, what is the euro doing? What's the pound doing? What's the Aussie doing? What's the yen doing? What is the euro Aussie doing? You know what I mean? It's not, there's so many different pieces of the puzzle now, aren't there? So to trade the euro, you need to know what's happening with euro pound, euro news, maybe euro Aussie, and maybe even the pound itself, right? So it's not as, even if you just, I read a lot where folks are saying, well, I want to start trading, but I think I'm just going to trade the euro. Well, one, you're oversimplifying. I mean, I'm all about simplification, but that is an oversimplification. And two, to trade the euro, you'd better know what euro is doing with other pairs too, right? And I'm going to elaborate here in a minute. So beware of, if you come across that, try and talk them out of that. All right. You want to be trading what's strong versus what's weak. And I'm going to try and help determine when is an appropriate time to trade strong versus weak. Okay. Just technically speaking. All right. Obviously, fundamentally, you need to have a bias too. All right. And fundamental bias is shaped through a million other things, but we're going to have a technical discussion today. All right. So, couple of just rudimentary basics to consider. All right, let's say we have a daily chart. So we're going to put a D1. All right, and then we'll have a little 4-hour chart over here, H4 with an H. All right, so let's say we have our little daily chart, and, we'll go over the raw basics here. Price has been going up, breaks a little level, comes back to it. makes a double bottom there, breaks up, etc. Okay? So what's happened in this one, and now let's say it's, coming down from the heights before, we're going to have a couple of areas of importance. All right? So this would be a support zone, being that price is above it. And like I said, I'm going over just rank basics here. Okay, and this would be our resistance zone. Let's just assume that, this was a tough area here at the top. And then we'll have sort of a light support zone through here, as well being that it's a swing high. Okay, rocket surgery, certainly not. All right, so my point here, though, is this. It's very easy to go on the charts and spot visual support and resistance, is it not? Very easy. Actually, I should take that back. It may not be as easy as one thinks. It takes a little bit of practice to work out these sort of turning point zones. You guys are very quiet today, by the way. But I think what's more important, though, is understanding how, how price acts around these certain areas. All right? So if one narrows this down to a 4-hour chart, okay, we're going to have something like that. So let's say, for instance, that price breaks down here, retests that little zone, and pushes down to our support area. Okay. Now, what could we expect from this? What could we expect? So now we're saying to ourselves, right, is this going down or is it going up? Because we obviously had sellers. This might have been a big sort of sell area that dropped. And now we're likely to encounter buyers, aren't we? Likely to. Right? I think that's a fair assessment. It was resistance or support double bottom before. It's a little swing in the high. We might breach it a little bit, but ultimately we expect this zone to bounce. So we expect this price action on a daily chart. Expect it. All right. So we can do one of two things here. We can plan to trade around that scenario. Okay. So therefore, we're anticipating what's going to happen in the market. And then 2, we can watch shorter term stuff to make sure that makes sense. Okay. So, when price is traveling down, they're making it to the low lows and low highs on the 4-hour. We might start looking for clues that this is about to change. And then you can put time of day into that clue. So let's say it's happening. Let's say we have something like this on the 4-hour. So this level here is this level here. So let's say it's bounced on the 4-hour. All right, and you're sitting, say, here at New York Open. New York Open. Is this a good buying scenario? No. However, it's bounced off support. So let's say New York chases it down, and then Asia is sitting at a higher low at the daily support. Yeah, pretty a fantastic buying opportunity. And then it bounces, makes it a little higher low. And then say London comes in and continues it. Is that not typical price action, right? We have a daily area of support, and I'm using my hands to illustrate this, which is funky because you can't see me. But you have a daily area of support, and then you have a 4-hour chart that's sort of a contingent of that. So now you have the smaller building block, and this is where the fractal comes in. The self-similar smaller building block of the larger whole. All right? And you can time these things using a little bit of time of day and some shorter-term charts, etc. Okay? But ultimately, what are we doing? Ultimately, what we're doing is we're trading a daily support bounce using time of day and a shorter-term chart, aren't we? But the primary function here is the daily support. Does this make sense? So the longer-term charts are going to be what ultimately sets up everything else. Okay, now the timing of these things, you want to use slightly shorter term. Okay, or you don't have to, but it's helpful. All right, so let me run through a couple of scenarios with you, and this is where the interaction is going to be key for your learning experience. All right, now, let's say let's say this is a euro chart. All right. And I like to keep things desperately simple, but we're gonna get a little more advanced here. A little more, but I feel like this, what we're gonna learn now, is a key skill set in today's market. It may not, this may loosen up, I don't know, in a couple of months, but for this market, and it's been like this the last 2 years, this is important. Okay. Now let's say that the Euro USD here is at our daily support area, that we're anticipating a bounce. Okay. But at the same time, the euro pound, the euro pound is at resistance. So in other words, even though the euro's been dropping quite hard, the pound's been dropping harder. But now let's say the euro pound is at an area of daily resistance. Okay? And the euro USD is at an area of daily support. Is this the ideal scenario for you? Is this perfect? Now, you've got to remember something, all right? Euro Aussie, I'm going to use abbreviations here. Euro Aussie, Euro Pound, Euro Yen. And these are simply derivatives of the dollar itself. Guys, I'm looking for interaction on this. So is this a Euro USD daily support, Euro Pound, okay, daily resistance? Is this a ideal scenario to trade this, what we discussed here, this buy side? Think about it. And remember something that if euro pound is likely to go down, it doesn't mean that the euro cannot go up. It just may not go up particularly vigorously, is it? In other words, your relative strength can work against you, right? So actually in a scenario like this, if the euro pound is at resistance, all right, we'll bring it down here. If euro pound is at daily resistance and euro dollar is at support, chances are, yes, the euro dollar is probably going to bounce, but the euro pound is likely to come down. So what currency is actually going to be weaker than the euro? Pound dollar. Pound dollar, even though pound has probably been falling, is going to fall harder. Well, then I think so. The question is, so you don't really trade the Euro USD to daily support? Well, I think for me, the support and resistance is a heads up to what is potentially going to be traded. So in other words, I'm sitting forward in my chair looking at the support saying, hey, this is a zone that could turn us up 180 pips. So then I start looking to see if the relative strength scenario works for that particular situation. You know what I mean? And I'll give you another example of just yesterday and today for that matter. All right. Does this make sense though? Okay, so we'll do another one. All right, we'll do another. Let's say that the Euro USD has been in a sharp downtrend. Okay, so the trend is down daily, and it's had a little bounce, and it's back at some meaningful resistance. Okay, so the Euro USD is at resistance daily, all right, and the Euro Pound is also bounced up, and it's at resistance. So in other words, Euro Pound is looking like it wants to potentially turn down, if not on the short term. And Euro USD is at resistance on the daily. This is your ideal scenario. because now you've got relative strength potentially working for you. You have the dollar related, you have the Euro USD at a meaningful area of resistance in the context of a downtrend, right? So your relative strength, your daily charts have supported what you're saying. There's a very good chance that this is now going to be a good looking short. Then you can start looking for reasons to take the trade to the short side on, say, a 4-hour chart. Okay? Makes sense? And unfortunately, this is kind of the landscape that we're in now. Isn't it? I mean, you can't, if you're going to take a euro short, I have a hard time just looking at a euro chart and saying, well, I'm going to short that. Right, so let me bring in a couple of real life examples. So in other words, you're using a couple of things here. Right? Daily support and resistance, as well as support and resistance on other crosses to help you time and anticipate your trades on your dollar-related pairs. Does this make sense? I mean, it's not a difficult concept, is it? It just requires a little bit of homework. And this can be narrowed down not only on a daily basis, but this can be narrowed down to hour by hour. All right? That's why it's difficult to trade currency on a laptop. It's easier to have other time frames at your disposal on this because you're going to be flipping around a lot. All right, so let's look at a couple of examples for right now. Okay, so let's take a look at the Euro Aussie. All right, and if we're on a weekly here, okay, and we've been in this little uptrend. Now, the thing that's important to realize here is that yes, we've gone up. We had this little inverse head and shoulders, and it's gone up big time and whatnot. Okay, but overall, what is the prevailing trend here? Overall, the prevailing trend is still, in my opinion, to the downside. I'm talking overall. I'm talking the greater trend here. Yes, we've had sort of major breaks of resistance, but I think overall the weight of the market, the Amazon River here is still flowing to the downside. Okay, so I think that's an important sort of thing to recognize. All right, so what does that mean? This is the 21 and 55 EMA here. We can take that off though, you know what I mean? Yes. The reversal could have started, and there has, I would consider, it's gone up 3,000 pips or whatever, or 2,500 pips. That's a pretty significant rise. Okay. And if anything, it is the start of an overall base here, isn't it? Get rid of this. Okay. If anything, just zooming out, if anything, we know that we're going to find, significant buyers here, aren't we? I mean, whatever happens, people are going to try to buy this. I think that's a fair statement. And even if it, I'm kind of anticipating sort of something like this. Over the next, 2 years. Right? Something like that makes some sense. Because the overall sort of weight of this is still down, and the Aussie has been in a loosening phase, but it's still stronger, relatively speaking. China's still growing at 7%. There's still things to prop it up. It's still the Aussie for me is still a high yielding currency. And I think that the euro, the ECB is a little bit of a mode of denial right now. But that's neither here nor there. Anyway, let's go back to this chart. So, based on this, and I recognize that we're at this resistance, but it's kind of a soft area of resistance. So what I mean by that is, it's an area of resistance that you can see where the candle bodies close significantly lower, and even to the point here where it dropped to 38.50. I don't think we're going to do that. But, the next area of resistance is down here a little bit. So in my opinion, it's still got about 200 pips of downside to drop. Okay, the weekly stochastic is down, so, I could see sort of something like this materializing. Something like that. Okay. But, so my point is here, though, is if we set ourselves right, we're expecting this to happen. Okay, and we pick ourselves out a zone. So let's draw a line where we anticipate this Euro-Aussie to go. So if we are right on this, surely we'd be looking for euro-dollar shorts. So in other words, if we want to long the USD, would we preferably, and I'm talking more in a swing trading sort of attitude there, would we preferably either short the Aussie or short the euro while this Euro-Aussie is dropping? Or we'd prefer to short the euro-dollar. Probably not, because I think a scenario like this where you have the weekly stochastic pointing sharply down, there's sort of weight to the downside. So it might do sort of something like this, but then I expect the second wave. Anytime where I see stochastics in the trade zone to the downside open like that, I think that the overall weight of the market is still on its head. So even if it stops prior to then, you could see it absolutely could. This is a good support area. If we go to 45, I think it then drops to that 41 level or 140 zone. So, to me, it would be more fool's goldish for this to go up. I think it's going to be sold quite vigorously. But I'll get back to my question I was asking. So in other words, we're expecting another 200 pips of euro-odd downside. So until it's hit that support, if I'm in the mood, if I look at the dollar index or if I look at the euro-dollar and I determine that the dollar is going to get strong, my bias until we've hit the support will be to short the euro over the Aussie. Does that make sense? Now, when we have hit this area, I expect then a bounce at least up, say, 250 pips. So once we've hit the support zone, and then if, say, the Aussie is at resistance, it makes sense that the Aussie is going to go into more of a weak phase. Does that mean that the Aussie dollar is in position to drop? No. The Aussie dollar chart has to make sense for it to drop, but it'll be set up from a relative strength standpoint for the Aussie to drop over other pairs, particularly the euro. Okay? Makes sense? So let me highlight this. All right. So let's say that we get down and we're sitting around 39.60 on the EURAUD. So it's kind of breached this and it's lurking around here. And we start our week there. So let's say that this candle pushes us, let's go to 80. And we're in a scenario that does sort of something like this, which is what I'm expecting. It kind of cruises down here. And if people go, oh no, that's that support, it goes up for a day or two. You get kind of a little, make your mind up candle. It fritzes around. And the bottom line is, we kind of fritz around here a little bit, and we cruise down to this level. And we're sitting down here. All right? And at the same time, when we start our week, this might be in, I don't know, a fortnight from now. We're sitting down here. And at the very same time, the Aussie dollar is, at the very same time, the Aussie dollar, let me get rid of this line, is doing something like this. Remember, we expected that little hiccup back to the mid 45s. So the Aussie dollar has done something like this. Okay, so EURUSD is sitting right around sort of, I don't know, 39.60. Significant weekly support. Does it mean that the EURUSD on that wave is going to make a higher high? Probably not. But the technicals are telling us it's likely to bounce based on the daily support, about 300 to 500 pips. One, the EURUSD becomes an attractive long position. But two, if we want dollar exposure, it's telling us that the commodity currencies are going to be in a position, maybe not to make lower lows, but certainly to chase down to further this whole rise. So if the dollar is setting up to get strong, we're probably going to now go and look at things like Kiwi, fruit, Aussie, okay, ZAR. Had a great time in South Africa last month. Kiwi, Aussie, ZAR, maybe even CAD. Okay, the commodity currencies, right? These are probably going to be in a scenario, while this is at support, for weakness. Does that mean that they're in a position to drop directly? No. But if they are technically in a position to drop, then those will be the preferred currencies, and you can catch a wave of commodity currency weakness. Said differently, if the euro dollar, pound dollar, Swissy are in a position that they are at support and are looking like they're in a position to rise, then you can likely catch a wave of European currency strength. Whether that makes sense fundamentally or not, it doesn't necessarily have to. But for a 300 to 500 pip stretch on the Euro Aussie, you can time a scenario where you're going to see relative strength and weakness for those different currencies. Okay? And don't think that the commodity I can't bear this out with statistics. I'd be lying to you. I'm not that advanced. But I can just see visually that gold and Aussie are not in sync. When I say commodity currencies, it's just the grouping, right? We can call them developing currencies or whatever. I mean, you can look at the Aussie dollar, and you can look at gold. And, we've had, we've had a little 2-week drop in gold, and Aussie's been on the recovery. So, when I look at gold, so what I'm saying is don't really time Aussie relative strength or weakness based on the contingent commodity, right? Because you might just be disappointed. Here's gold for me. Trend line coming up, downtrend, but just at the top of the stochastic cycle, getting into the green zone. So if anything here, we'd be looking for sort of something like this when we, you've got support. I don't know, what's it at, like 1260. You can zoom in. Yeah, 1275. So likely scenario for gold now, weekly turning down, daily at the bottom as we come down to the sort of 1250, bounce back into the resistance, chase it down to that sort of 1180, and then something like that. Right? How is that, how do we determine this? Is this just pie in the sky? No, it's certainly not. Because all we've done is we've said daily support, exhausted the wave on the daily. So therefore it's likely that we're going to go back to resistance, or where's resistance? why would we drop to potentially a lower low? Well, I don't think it's hit the most meaningful support, so therefore it's got a little bit of room. 2, it's in a weekly downtrend, so the weekly trend is likely to prevail. So likely to come off resistance. By that time, this daily has sort of cycled back enough to take it down. This scenario here on a 4 hour is likely to look sort of something like this. Top out and then roll over. Okay. And then, why down to 1170? Well, we just ascertained on the weekly that that's a pretty good support zone. And we've got this trend line there. So, maybe even 1140. And at that point, we would look for it to sort of bounce maybe up to where it came from. And then, just hang out there maybe for a year. Gold, in my opinion, going to be dead money for. But can you see how, in that scenario, you're using daily, weekly, support and resistance, the waves of exhaustion as they go. I hate using the word exhaustion because a trend never gets exhausted. An uptrend is never overbought. Downtrend is never oversold. That's the reason why they trends, right? You guys have heard my glaucoma test. A fractal to me is, basically a self-similar building block of the larger whole. So it was defined to me like this. So if you went to an art gallery and somebody showed you a picture, and this picture was, I don't know, 1 meter by 1.5 meter, and then you took a tiny little pixel of that whole picture, you could see all the characteristics of that larger picture within that one pixel. Right. So let's say on this, and I'm using gold here, it really makes the difference. But let's say on this gold chart, price is sitting down here, which we know is a zone of support. Okay, so to make a downtrend, it has to switch direction. So it's likely to go from making lower lows and lower highs, as it's done here on a weekly, to potentially making higher lows and higher highs. Now, it's not likely to do that on the weekly chart because the weekly chart takes a long time. It's like turning around an aircraft carrier. Okay. But for price to bounce from here back to an area of resistance, okay, we're likely on a 4 hour on a daily chart to get a transition like we saw here on a weekly chart, and I've probably lost you, right? So a 4 hour is going to look something like this. However, just bouncing off weekly support. So the 4 hour is going to come down, hit our 1250, 1240 area, and do kind of something like this. Break these last two highs, slip back to the green zone in this rise, and then kind of make that double bottom and fight its way back up. So we're in large part going to get a scenario that looks like this on a weekly. This is a weekly chart which takes, this is the better part of a year's worth of information here. And this would be a 4 hour chart that takes 48 hours. But the way it looks and the way it appears to you is going to be identical on the 4 hours it was on the weekly, just at weekly support. And obviously the magnitude of the move is going to be significantly less. So here it's likely to rise $100, where here it rose 400. But the visual is the same. Just the time horizon is different. Makes sense? And then you're going to hit the weekly resistance, and the same scenario on the 4 hour to the downside starts to develop. So you're going to see this sort of thing on an H4. It's going to look the same at a weekly area of resistance, and it's likely to push down because it's with the trend more towards the 1160, 1170 area. I mean, the hourly candles are obviously going to make up the daily candle. Yeah, all right, so let's say, I don't want to do a ton of analysis because we have FOMC, and FOMC could throw, the market's just lingering on those words. Oh, should we withdraw QE? When is it? It's all just so silly. Anyway, so, do 24 hourly candles. Yes, but I think, yes, 24 hourly candles obviously make up a daily. But that doesn't mean without the daily chart, we can necessarily anticipate how the 24 hourly candles are likely to go. So I'll give you an example. Let's say here's an Aussie chart. And if we just zoom out here a minute, if we just go back to the weekly, here's an Aussie chart. We can positively draw a zone of resistance here. Okay. So here's our zone of resistance. Why? Well, there it is. Okay. So let's say, I don't think you can mirror it. I don't think one can take it quite as literally as that. But the pattern recognition is going to be pretty similar. I think that's what I'm getting at. The behavior is similar. It's just the time context that's different. We are sitting here, I don't know, Friday. Okay. Is Aussie necessarily rolling over? No. But what would we anticipate the color of that candle to be? If the daily candle here, what color would we anticipate it to be? Probably red. Right? If it doesn't make sense on a 4-hour out, then it's not. But we can anticipate that this is likely to be a red candle based on the resistance, based on the fact that it's gone up, 300 pips and its little moving averages all the way down there. We can anticipate that this is likely to be a red candle. Does that mean that Aussie is rolling over? No, we don't have proof of that yet. But for that day, it's likely to be a red candle based on the first time it's hitting the resistance bounce. So then the hourly is likely to look maybe something like this. It's cruising up. You start to get this sort of thing going on. And then, you get kind of this London Open kicks in. And you're sitting at a lower high anticipating red. It sets up a relatively low risk short down. Does it mean that it's a sustainable short? No, probably not, because if this is going to roll over, it's going to need to do this. But you could catch 80 pips on the short. Based on the fact that you're anticipating a red day, you're forming a lower high at the London Open. Maybe you have hourly ready to roll over, right? This is how one can use these daily candles and daily charts to anticipate what the move is going to be for that day or the next 2 days. Okay? Does this all make sense? So, in summary today, really the big lesson is daily support and resistance. All right? Been over this a million times. All right? And I think my last webinar talked about anticipating the something to the effect of the blindly obvious or something to trade the market. Encourage you to go watch that. And then you can take those blindly obvious levels, and then you can use cross-currency correlations and technicals themselves to anticipate waves of relative strength. And waves, when I'm not talking, I'm talking about what I mean by waves is periods of relative strength changes to project what currencies are going to be strong and weak moving into the future. Okay? I know it sounds a little bit convoluted, but it's really not. Okay, here's a dollar index chart. This is kind of where we're at here. Predict a little area because, if we break this little zone, it's nobody at home. Got like 2 full points on that. No, I'm just doing my own thing. I'm no longer, I'm not affiliated with FX Bootcamp right now. Yes, it is. It is. Elliott Wave is it is, and it's probably coincidentally is. I haven't planned it like that, but it is. Yep. At the end of the day, we're all looking at the same thing. A little bit. I mean, things are much quieter, but I'm okay. So, any last minute questions, guys, or that wraps up my presentation for the day. No idea what I want to talk about. So if you have any ideas, by all means, tweet me at ForexDavid. Okay. And thanks, guys, and we'll chat to you. I think I'm running a live FX Street Room on the 15th for Mauricio. So, watch out for that, but I'll tweet it. Okay. Take care, everybody, and I'll see you next month. Thank you.